All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. And if you're interested, I do run a online options trading room called Flip That Option, FTO. And if you're looking to trade with like-minded individuals, the link is in the description below, where you can actually join my community. And we send out trade recommendations every day. We also send out what we call levels specifically for the SPX, because we primarily do 0 DTE expiration trades. So I actually send out every day 3 levels where you can place your position on either the call side or put side and have a high probability of walking away with the money. So again, if you're looking to join FTO, Flip That Option, the link is in the description below. With that being said, today is June the 14th. Obviously, the market is closed. It's a Saturday. It's approximately, what time is it? It's approximately 10:51 a.m. Eastern Standard Time. And so one of the things that I want to discuss, well, the main thing I want to discuss here is, folks who have a small account, and I consider a small account, less than 25K. Some folks may say less than 50K, but nonetheless, if your account is less than 25K, and what I recommend to my members is that, you don't want to trade the SPX. You really should be focusing your 0 DTE trades on the mini SPX, which is called the XSP, right? And the reason being is because the risk is much greater trading the SPX than trading the mini SPX. And so let me show you an example here. So we're looking at a hypothetical trade here, right? Putting on a put credit spread where the short strike is at 5,900, the long strike is at 58.95. So we can look at the delta, and the delta gives us a quick thumbnail approach of determining what's the probability of the value of SPX. Let me pull up my pointer here. Give me 1 second here. There we go. Okay, so the value of SPX when the market closed on Friday was 59.7697, right? And so looking at this hypothetical trade here, the delta on the short strike is 21. And so if we look at just the number to the right of the decimal, that gives us 21. So if we subtract 21 from 100, we get 79. So essentially, the delta gives us a quick way of determining what's the probability of us walking away with the money. In other words, what's the probability of the SPX's value not breaching our short strike of 5,900? Well, it's 79%, right? Because we subtracted 21 from 100, that gives us 79. So we have a 79% probability of walking away with the credit here. The credit here is $75, and we have a credit spread of 5, right? The multiplier for an option contract is 100. Why? Because an option contract controls 100 shares. So the spread is 5, the multiplier is 100. 5 times 100 gives us 500. So we have a risk of 500 if we're only doing one option contract. But oh, by the way, we get a credit of $75, right? So we subtract 75 from 100, which leaves us with the maximum potential loss of $425 with a max profit potential of $75 if the price of SPX does not fall below 5,900 on the day of expiration at 4:00 p.m. Okay, so now let's look at the same trade, looking at the mini SPX, right, which is XSP, and we're going to the same delta of 21, but in order for us to have a apples to apples comparison, in other words, in order for us to have a $5 wide spread, we have to go down to 585. And notice that the long strike, this here's the short strike, the one that I'm selling, this here's the one that I'm buying, which creates the spread. Notice that the long strike has a delta of 11. So what does that mean? So that means that the delta here on the SPX has a larger delta, right? It's 20. So in order for you to have a complete loss, to actually lose $425, the value of SPX has to drop below your your short strike as well as your long strike of 58.95 on a day of expiration at 4 o'clock in order for you to realize a complete loss, right? So now on the SPX, in order for you to have a complete loss, the XSP or the mini SPX has to travel a lot farther. It has to travel more distance for you to have a complete loss, because the delta on the long strike is actually smaller, right? And so in other words, there's less risk in trading the XSP than trading the SPX. So the XSP is actually 1/10 the size of the SPX, right? And so although if we're looking at the same type of trade here, you notice that the profit potential on the mini SPX is smaller. So what? You know, the fact of the matter is that the risk is a lot smaller on the XSP as well, because the price has to travel a larger distance in order for you to have a complete loss. In order for you to have a complete loss on the mini SPX, the value of XSP has to drop below 585 on a day of expiration. So a larger travel distance versus on the SPX, you know, with it having a delta of 20, meaning that there's a 80% chance that you'll be able to walk away, you know, without having a complete loss on your trade. On the mini SPX, there is a 89% chance of you walking away with not having a complete loss, right? So the probability is higher for you to actually walk away with the money or not have a complete loss on the mini SPX versus the SPX. So hopefully you guys are tracking. Hopefully that makes sense. Now, of course, you're going to get a larger credit with the SPX, but so what? Again, so what? The risk, your main concern, or your main the main thing that you should be concerned with when you're looking to trade, or should be your priority, is managing your risk, right? So you should always think risk first and profit second. And so the fact that the risk in the mini SPX is lower, in spite of the fact that you have a lower credit, is actually a better trade than trading the SPX, particularly if you have a relatively small account. And a small account, I'm saying, is under $25,000. Some folks will say under 50K, but I'm saying if you're under $25,000, then you really don't want to be focusing on trading 0 DTE on the SPX. You really should be focusing on trading the mini SPX. And yeah, the mini SPX is not as liquid as the SPX, but nonetheless, I have not had any issues, you know, because I do trade the mini SPX. Although my account is greater than 50K, I still trade the mini SPX because I'm always thinking, my thing is risk management first and foremost versus looking at how much money I can make, right? So risk management takes priority. And so again, you know, trading the mini SPX when you have a relatively small account is definitely the way you want to go, because it's going to increase your win rate, and also you're going to have better risk management with the mini SPX.